Start the recording. All right. So obviously we'll wait a little bit more longer for more people to join. But if you got any questions, normal kind of backtesting / Q&A stream we normally do on the weekends or during the week. If you got any questions, anything ICT related, psychology related, you can put them up in the chat and we'll go over those. Otherwise, there's no really agenda for today. Last week we covered some 950 macro stuff. Today, probably just going over some weekly setups and expectations going into August, possibly a weekly outlook for next week as well. So yeah, well, it'd be probably like an hour long at max, I assume, unless there's tons of questions. But we'll start with, I guess, the setups from the week. Working our way down from top down. Actually, let me remove some of this stuff. So we did actually reach the 60-day sell side on the daily chart. That's our look back. So whenever we're taking the data on the look back, if you're interested, it's going to be on the daily chart. This is not fractal. It's only specific to the daily. Whenever we break market structure, so if we break a swing low like that, you're going to take this candle and then you're going to take your look back. So if you click shift and then click on whatever candle, you can use whatever range you normally use. And if you go back to 60 versus 60D, 61 is fine. You're going to have your lows obviously marked out if you're bearish, highs if you're marked out as bullish, and then anything 60, 40, and then 20-day IPTA lookbacks are going to be your most important ranges. So we did just tag the 60-day. Now the month of August is not really a trending month. It does kind of consolidate. So we could be looking for just kind of a consolidation, as we are around 50% of this daily dealing range anyways. Probably return back into this order block, just kind of chop around, and then possibly into September, August, maybe put in a swing low. We actually may go for this sell side, I don't know. And then we'll continue up into the fall months and into December, hopefully with a December rally as well. But go over to 4 hour. We have our weekly open here. So here's our weekly open. Kind of played out decently well to the expectation of the weekly outlook. We're looking for a 4 hour premium bounce, reached up into it, filled it completely. And then after that, it was kind of just left up to whatever we want to go for, buy side or sell side. I do think that is a little weird that we sold off all the way into Friday. It's definitely kind of a, you can look at the profile even just from Sunday opening, just literally going back and forth, seek and destroy kind of NFP week, creating new highs, new lows, back and forth throughout the entire week. No trending day really besides after Thursday, I guess, but difficult week. And you can expect this kind of stuff, hopefully a little bit better next week. We actually have a good news profile. Monday is 10 a.m. news, and then I think we have Thursday news at 8:30. So pretty high quality stuff. I would look potentially for a setup every single day next week, maybe excluding Monday as the only one. Can you go over a mechanic approach to entering trades after displacement leg? Wait, let me actually type up so I don't forget. We'll do weekly outlook. Trade setups from this week. All right, just so I don't forget. Go over a mechanic approach to entering trades after a displacement leg. Okay, so this is assuming, I guess, you already know you're drawing liquidity. You already have focused in what you're looking for specifically. Mechanic approach. You do need to have, I would say, at least for sure one. If you're not comfortable with, it depends on obviously the displacement leg specifically, but the two that I like to use for just like the entry type, the easiest one is obviously going to be fair value gap based. So whatever gap you're looking for, if we have a bullish drawn liquidity, we're only going to be using BISIs, right? If we have a bearish drawn liquidity, we're only going to be using civvies, no inversion gaps. That's going to be the easiest way, obviously, to capture expansion moves. If you're expanding up, you use the expansion leg that form that displacement, no inversion fair value gaps. If we're not going to use just SIBIs and BISIs, that's like the most basic level, how do we build onto that? Well, I'll use the bullish example for this. The two that I'm looking for is if we have a displacement leg, the entry needs to be preferably within discount of that short-term displacement leg. Doesn't need to be the full leg, just a singular swing low to swing high. Preferably that creates a dealing range. So in this case, we'd be looking for a BISI that's in a short-term discount to enter in a displacement leg. Then expansion up, preferably with a bullish order block that supports it, even on the lower time frames. And then the secondary entry type would be some sort of a breaker leg that does not need to reach discount of this displacement. So if we have a breaker present with the fair value gap, then you're going to just be looking for any inefficiency really that lines up with that breaker or above it. Most times it won't reach below if it's a true breaker. If it reaches into that higher time frame level. Let me do this. Right. Now there's going to be times, there's a third entry if you want to use it, is when we're just really expanding. You're not going to see any retracement into a short-term discount. It's just going to keep going, right? Let's say during silver bullet hour or when the draw on liquidity on the higher time frame is extremely obvious. You have days like maybe Wednesday or Thursday where we expect to expand on those days on the weekly candle. Then you just be looking at a clean continuation, and it has to be time-based, meaning preferably it's got to be earlier than later. So I would look probably between 9:40, obviously depending on the news, but say you had no news, then I would be looking really between 9:40 and 10:15 to find an entry. I mean, obviously macro is preferred, but that would just be really a continuation leg in line with order flow. And obviously the draw on liquidity would obviously not be met on all three of these. But if we're just finding a strict continuation that's not retracing into discount, this happens a lot of times when we're just really expanding, like on a Wednesday. The past 3 or 4 Wednesdays, we've just been dropping here, and then Wednesday of this week, we actually had somewhat of a setup. But you can see it were just large expansion days. Kind of need a continuation entry. So that's the most easy mechanical way. It's going to be fair value gap in the leg of displacement, preferably paired with some sort of an order block, either a regular order block, a breaker, or if you want to get fancy, then you could pull other stuff. But it's not more complicated than these three. So don't complicate it, overcomplicate it. You don't need every single PD array lined up. Just have single fair value gap in the displacement leg. And then it's going to be either discount, breaker, or continuation. And the continuation, this is going to be the most difficult one to trust, but it has to be framed on some sort of a higher time frame bias, day of week, and time of day. I'm just amazed how DXY came to the spot you talked last time. They only had buy side offered and no sell side was offered to the market. Need to get there to offer sell side. I don't even know what I said on DXY. What did we go over? Oh yeah. So this is the inefficiency, I guess. I've totally forgot what I said about DXY. But yeah, we look for probably a rebalance of this entire inefficiency. But you can see now DXY, you look at the daily here. Complete downtrend on the daily. And then you pair that up with the NASDAQ daily chart where correlated. Should not be correlated. So one of them is going to flip, one of them is not going to. And until we're aligned on DXY, you're going to see this kind of price action back and forth. Hi, Flux, could you go over on what was your aha moment that took you to the next level, or was it the most important thing for you to find your edge? That's a good question. I think there's different things in both the charts and outside of the charts, if that makes sense. Like there was different moments for me that, like, let's say getting my first payout, I think the aha moment was mostly psychological. But then before that, it was strictly finding an edge. Like, for example, a lot of the psychological problems that you face are caused because you have a lack of trust in whatever your model is. So that's why I tell, new people who join the private group, or even if you hear me on videos, is you have to, for a moment of time, once you've learned everything that you want to learn, you stop learning new things. And that was a big part for me. I guess that was an aha moment where I used to be super studious about, like, I need to learn everything ICT related. Um, that's just the way I function. But there's a certain point where once you learn enough stuff, like, you really don't need to learn anything new, and you have to remove yourself from environments that just push new ideas. Like Twitter is one of those things where it pushes those new ideas onto you, and if whether you need it or not, it just feels like, oh, I'm missing out because this person using this new model, and then every month there's a new flavor that someone else is using that is more profitable than others. So once you've learned enough, you remove yourself, and then you have to just sit and not back test. You just sit, and every day, whenever your session is finished, you just screenshot every single time frame. So daily down to the 1 minute if you trade on the 1 minute, or otherwise it'll be like the weekly, daily, 4 hour, 1 hour, whatever you trade. For me, it's going to be the daily 1 hour, 15, 5, 1. And I would just screenshot it for 2 months straight. I would screenshot every single day of price action. And then that's where I figured out my model. That's where I figured out, okay, these are the things I repeat. I like to see these things. It's really easy to spot. And then once you develop that, you just have to tune out everything else. And it becomes easier to trust, okay, if here's my entry, like I know it's this exactly, it's very easy to, all you do is just figure out how many contracts you're using, what's your risk based on the day, whatever, put it on, forget about it, right? And if it's not there, you know exactly, I'm not going to make this exception because, in my model, it just says fair value gap to enter. It's like it's got to be super specific. So that was one of the things that I think pushed me over. Once I had my model that I trusted and I know shows up, even if I get one execution on a week, that's normally more than all I need, right? Like 50 to 100 points as a starting threshold. 50 points is easily achievable, and it's like a good goal to have on the week. Then you push it up to 100. Then you can push it up to maybe like 125. Anything over 150 per week, you're killing it. So that was a big moment for me. And then I would say the rest is just dealing with stuff outside of trading. Like really reprogramming your mind. And we can get into a whole conversation about that. That'll be like a whole 30-minute conversation. I'm not going to get into that too much. But there's ways that people talk about, like, people are just like, oh, you got to reprogram your mind. You got to not be emotional. And that's like, I disagree completely with that. I think the only reason that you're not emotional is because you've reprogrammed your mind using active things. You don't just sit in front of the charts and then you're like just trying to struggle to strangle yourself from not clicking a button. Like, human nature is going to be human nature, and there's only so much you can do about it, and the rest is up to you outside of a chart with just a pen and paper and just figuring that stuff out. We'll go over that later in the stream. I'm not going to bore everyone with it, but yeah, if you joined late, if you got any questions, you can put them up in the chat and we'll go over those. I'm going to go over the setups that I liked from this week. Friday's execution was a little rough, I think. The two ones that I favored was the Wednesday expansion. And I think there was one on Tuesday. We'll go over those quickly. We'll go Tuesday, then Wednesday. So here's the Tuesday setup. So obviously on the 1 hour, we're stuck in this consolidation zone. The target for me on the weekly chart was a 4-hour premium imbalance for us to reach and then kind of trade away. So I was bullish for the first half of the week, at least. And then we kind of traded up here going into Tuesday. And I think we had SMT at the highs. If we go back to Tuesday, you probably could find it. Don't worry about this. It's a demo. So here's your Tuesday SMT. We got a sweep on, what was that, PM session high? Failure sweep here. So SMT, bearish, and we have some low resistance liquidity on the sell side. Definitely difficult day to find bias, and this is one of those days where you have to use just intraday observations to find a clean bias. So if there's not a clear manipulation under midnight, like this is a day, I think prior to the open, I was looking for a potential expansion. It was just the wrong day of the week to just get a continued expansion. But if you're looking at the midnight opening price and then the 8:30 opening price, if you fail to get any manipulation on either of those, and it's like a Wednesday or Thursday, look for expansion into 9:30, and potentially a really no Judas swing to formulate. Okay, so if we look at Tuesday, we didn't have that. I just want you to notice. So Tuesday, for me, the model is the ATM model. Just my preference is just my own model. So that would constitute some sort of a 15-minute Judas swing with SMT. Can I expand this out? There we go. And the two times looking for the 15-minute chart is either a turtle soup, so where the candle closes below buy side or above sell side, or some sort of fair value gap we're trading into on the 15-minute chart. Obviously, this is after bias. Then 5-minute candle printing the direction, so order flow. 1-minute entry, preferably during macro time, using the 2 entries or the 3 entries that I gave you earlier in this stream. So if you look at 9:30, what do we see? Well, we have a session pool up here. This is the PM session high. This is previous day high, but you have PM session high being purged right at 9:30. Let me look at the news profile for Tuesday really quickly. Tuesday we had 10 a.m. news, right? July 30th. Yes. So 10 a.m. news. Preferably looking for an entry right after the news if it's given. You got manipulation here. You can mark out your 9:30 open, and what do we see? Well, we pierce the buy side, and reversal signatures will be very similar across all time frames. What we're looking for is preferably on the 15-minute and above. Like those higher time frame reversals are going to give you the best setups. And 15-minute is the minimum you're going to be looking at for reversals to happen. Okay, your 15-minute reversals are going to be high quality. Why is that? Well, if you go to your time frame pairing, what time frame pairs to the 1 minute? The 1 minute chart is going to be your 15-minute chart, right? And the 1 minute chart is really going to be the lower time frame chart you're going to be using to trade. So the absolute minimum you're going to be using for a higher time frame bias, or to look for reversals, for value gaps to be traded into, order flow for reversals, is going to be the 15-minute. If you're using the 5-minute, it's not going to work. If you're using the 1 minute to look for reversals, it's not going to work. So we pierce up here. We got the SMT at the highs that was outlined before. And what do we get? We get a closure below the buy side. You get the wick doing the damage, purging the stops, and we're going to revert now, where we print the candle down, and preferably we have this order block. You want to see a closure through the order block with that same candle. We don't get it here, but the next candle, obviously printing down and closing through the 15-minute, change in the state of delivery. This is a change in state because you have the bullish order block here. Normally what you want to see is it trading up, bouncing on top of it, and then trading fast. When you get a closure through, that's your change in state, and you can kind of see the breaker that's forming here too, right? High, low, higher, high. You get your breaker. So 15-minute candle doing a lot of that damage and giving you a lot of information that you need for the rest of the morning session. If you're not using that first 15-minute candle to just read and you're struggling, I would say it's so important, because yeah, you'll miss some setups. You'll miss some of those 9:30 moves where it just expands. You'll miss some of those 9:40 for value gaps and then just leaves without you. But majority of the time, you're just waiting for those first 15 minutes, to just play out, give you some data, and you use the rest of the morning session to do what you want. It'll be so much easier, because you know that if we're looking at any day specifically between 9:30 and 12 or 9:30 and 11, you have 2 profiles you're looking for: an open high low close, or an open low high close. That's your 2 profiles. There's no in between. There's no ifs, ands, and buts. It's just these 2 profiles. Obviously, if we have a news driver like 8:30, then you're going to be looking between 8:30 and 11. or 8:30 and 10. It's that's a different conversation. But these are the two profiles, right? If we're bearish, what are we going to see? Oops, these are the same profiles. Let me do this properly. These are the two profiles. If we're bearish, we're going to be looking for an open, high, low close. And your trade entry is going to happen between, preferably as close as you can get to the reversal, and then all the way down towards whatever that draw on liquidity is. That's where your entry is going to happen. You don't want to be entering most times before that reversal finishes, unless you're trying to target the counter side of the trend, which you can do. It's just that's going to be much harder to find. You're going to find it's going to be smaller ranges and doesn't expand for as long as you'd want it to expand. So you're going to be finding this entry in here or in this expansion leg. So you wait for those first 15 minutes to play out. You already kind of know, okay, if we're opening here, we're manipulating above buy side, we get a closure below, and we're starting to pierce below mean threshold of this order block. What can we expect? Well, potential open high-low close. Is there low resistance sell side? Yeah, all the way in here, right? All these stacked lows from Monday. We have just consecutive lows without any turtle soup on these. That's really, really low resistance. You can see the low resistance over here too. Spotting the low resistance is going to be important for market maker buy models and sell models. And obviously it's all going to be time based. So preferably before 9:30, you're going to be looking for some form of low resistance buy side or sell side on the 15-minute chart or above as a draw on liquidity. So you have an open, high forming at 9:30, low resistance, and then you can start dropping down on lower time frames to see if we get any confirmation that we want to go lower. So on the 5-minute chart, what do we get here? Well, we have, mark on 9:45. This is where you'd be looking. 9:45. Here's 9:30. Mark on our 9:30 open. And what do? We just kind of just chop back and forth. There's really not any trade setup in that range, right? Then we displace lower. You have a 5-minute breaker in here. Not the cleanest, but high, low, higher, high. There's your breaker. So what are we looking for? Well, since the breaker is present, it doesn't need to return into discount, actually premium of this range. It just needs to preferably tap some sort of the breaker on the lower time frames, continue lower, or we just have some sort of a continuation entry, right? So we're looking for 5-minute order flow to confirm our idea. While we have a closure, obviously past the breaker, we also have a closure past an inefficiency. And then you just look for a 1-minute entry that's in line with whatever news profile we're using. So in this case, we have 10 a.m. news. So we're going to be looking for preferably after the news, within macro time if possible, or slightly after. So go to the 1-minute. What do we get in this range? We have the open, expands up, takes out the high, SMT, reverses, trades lower. 10 a.m. news comes out right here. Not crazy high impact, but we do have 10 a.m. news. And we're looking for some sort of a reason to go short. Well, we do have this inefficiency. We're also piercing the sell side at the same exact point. So in this case, a bearish dealing range is when we pierce buy side first, and then we pierce sell side. Bullish dealing range is when we pierce sell side first and then buy side, right? Like you kind of already know that. It's nothing new. If we have buy side here, sell side here, and we pierce the buy side first and then the sell side, you have a bearish dealing range, right? You're gonna look for premium. If you pierce sell side first and then buy side, you have a bullish dealing range. You're gonna be looking for discount. That's basic stuff, right? So if we pierce the PM session high and then we come down here at 10:02, we run out the London low, what would you expect to happen next? You think it's going to just trade into this and then wilt lower? I would look for some sort of a premium run, okay? So what is premium? Well, you have your buy side here up to the low that's formed. And you're looking for some sort of an entry after the macro time. So in this case, we tap premium perfectly here. There's not any inefficiencies in this range. At least on the 1-minute, you'd have an order block that's lined up with premium. But that to me is more specific than you'd be looking for during the day. Like that's something that's more clear in hindsight than it would be during the day. So what do you get? Well, there's actually tap premium. What's the price level on this? 19,242. 19241.75. So we actually fail premium. So you're still looking for premium. Trades up into premium. Then what do you get? So we have a premium market hit. Then we displace away from it. You have a market structure shift on this low, right? That's your 2022 model. So you just be looking for some sort of fair value gap in premium, or really just in this displacement leg to go short off of. It's just fractal, right? Open, high, low, close. In this case, it's a buy side pool. You have here with the 10 a.m. if you want to use 10 a.m. Open, high into premium, low during the time window you want to see the low form, which is going to be between 10:30 and 11 o'clock on the AM sessions. So you just find any imbalance on the way down. It's the wrong time for this low to be put in, right? It's 10:02. You want to see one put in between 10:30 and 11. So this is where I went short off this premium imbalance. I think it does reach short-term premium. Oh, no, it doesn't. But short off there, targeting your low-hanging fruit, which would be here. And then we also had a 15-minute imbalance that was below us in discount of the dealing range that was formed prior. So here, what do you have? You have a sell side sweep first to a buy side sweep. So this is a bullish dealing range. 15-minute imbalance you have here. Can mark this out. And go back to the 1 minute chart. And then I covered, I think, somewhere around the 1034, which is in the time you want to see a new low and in the price point of a 15-minute or 60-minute imbalance. And that's more than you need for the week, right? 64 points or so. If your target is 50, that's one trade in a week where you're looking at the same kind of fractal setup. And it's clear to see. And this kind of analysis is what I'll do most times every day, either off stream or on stream. That's going through my head is, here's the bias. Here's the profile we're looking for. It's either going to be open high, low, close, open low, high, close. And then if we're using a macro entry, we're trying to get preferably the second stage of distribution in the sell model or the buy model, or it's going to be some sort of a lower time frame first stage on a higher time frame second stage, but that's a different conversation. We're just trying to get in the move before the low is put in or high is put in between 10:30 and 11 o'clock. And that was similar to the setup on, let's go to Wednesday quickly. The setup on Wednesday was very similar, except we just had a continuation day. So let's go to Wednesday. Here's 12 p.m. So same exact profile here. Wednesday, I want you to notice we do have, we go to the 15-minute chart. Our midnight open price is here. Here's midnight. And then 8:30 was over here. This is also FOMC day. So you're not going to expect huge ranges in the morning session, just kind of scalping. So barely any manipulation below midnight. We did get some though. So that's a good sign. Manipulation lower, trades up 8:30. Not really any clear manipulation there. I don't think, did we have 8:30 news on Wednesday? I think we did, right? So not any manipulation there, kind of just expanding up. And then you'd be targeting that 4-hour premium imbalance, at least for me. That was up in here. That was the current draw on price for me. So 15-minute chart, we're just looking for the same stuff. Is there an imbalance or a stop hunt at 9:30? Well, in this case, we have a 15-minute IRL. Trades down into at 9:30. And if we already had a bullish bias, what is the profile we're looking for? Open, low, high, close. And the entry would be within this expansion leg. So trades into the imbalance. Do we have any form of SMT? Get why I'm off this. Put it back to the OG. All right. Wednesday. Here's 9:30. It's not clear if I zoom in here. Here's 9:30. And here's 9:30 here. It's not super obvious SMT, I guess, someone who's new, and the most obvious one they'd be looking for is this kind of SMT. That's what you'd be looking for. There's no SMT here, but you'd be looking for, if you were new to SMT, relative equal lows, between 5 a.m. and 9:30 a.m. is when your SMT is going to happen. So mark out the lows if you're bullish, the highs if you're bearish, between 5 a.m. and 9:30. The exceptions to those is going to be something like, previous day low. If previous day low is manipulated on ES and the low on NASDAQ isn't, that's obvious SMT too. But in this case, you're at lows here post 5 a.m. but prior to 9:30. So that's the lows you want to be looking for. But in this case, we have kind of a different SMT. We have 8:30 news. So the data low is important in this case. That's a form of technically session ERL. But your data lows at 8:30 were manipulated on ES. And look at the closure here is closing back above the sell side, which is a good indication of reversal. You'd also have a value gap here that price is trading into. But taps that, you have 9:30 coming down here and trading into their imbalance, which is one of the things you're looking for. So the SMT is present. Go back over here. Trades into the imbalance. We're looking for an open high-low close. Then on the 5-minute chart, what are you looking for? Order flow. Some sort of a 5-minute change in state of delivery or a 5-minute order block that price is respecting. In this case, we do have expanding up. I think the order flow is pretty bullish. Most people can see that even if you're not ICT trading. What do you have here? Down closing candle, supporting price at 9:30. We're not closing past it, which is good. So 5-minute order block there holding lines up perfectly with consequent encroachment of the gap. And then what are you looking for an entry? Well, since we have this kind of down closing candle, preferably you do need to see this close past. That will be a short-term change in state delivery, right? This would be on a lower time frame. This will look like open at 9:30, trades down, and then we have something like this, right? So we're closing past that original downtrend, and this would be a breaker in some sort, or just a regular 5-minute change in state of delivery. So if we close past this, we already have a 5-minute order flow supporting our idea. So we're just looking for an entry now in the 1-minute time frame using those two entry types outlined before, either for value gap and premium or discount, or some sort of a breaker entry. So in this case, we have closure past. Let me mark out which candle we'd be looking for. So candle that closes past. We have 9:45 candle printing bullishly here, which is your first indication. 9:50 is where you'd be looking for after, right? Because that's your change in state right here. I'm going to mark it out. The 9:30 candle. So 1-minute chart. Is there any entry opportunity we can find? Well, in this case, we have a breaker here. You could use that to enter. This is a little bit more difficult. I know we normally wouldn't use this, but we do have inversion for value gaps here that are traded through. And then if the manipulation has already happened, what would you expect price to do? Well, we want to see it expand, obviously. And if we're expanding, what do you know the characteristics of expansion stages of delivery? There's 4 stages, right? There's consolidation, expansion, reversal, and retracement. Expansions, the PD array that you're looking for is order blocks. So order blocks are going to hold price up. In this case, if we're really expanding into time, meaning what time, if this is a open, low, high close, what time do you want to see the new high or low put in? Between 10:30 and 11 o'clock, right? So you want to see some sort of expansion into this area. What are you looking for? Some sort of way to get in line with order flow. So it has to be after 9:50. We're looking for some sort of a entry opportunity. Well, you have inversion gap, you have the breaker, all that's allowed. Definitely a difficult entry though. And then you have order block there. You could use that. Trades up here. You have a short-term dealing range. between a short-term run on sell side. This still counts as sell side, but it's a short-term run on stops, right? And a short-term run on buy stops here. So that's a bullish dealing range. Take the dealing range low to dealing range high, premium to discount. There's your entry opportunity. If you wanted to use that one, and maybe you don't trust this inversion gap with your order block, that's too complicated. You wouldn't see that in live. You're just looking for the standard stuff. There you go. 10:03 within macro time, it drops into a short-term discount into the fair value gap, also tapping a bullish order block on the way down. Just down, last two down closing candles. It actually taps the wick, which is even stronger than normal, but normally just be drawing out the open there. But order blocks all holding the way up. Short-term entry here. What are you looking for? Preferably this gap or any, obviously, PDA on the 1 hour or the 15-minute. In this case, we'll go to the 1 hour. In a short-term premium or discount, you have this 1 hour gap in premium. Right, it doesn't need to be a 4 hour. It's just got to be 1 hour or 15-minute. Go back to the 1 minute. Trades into there. We tap it. Is this the right time to put in a high? No. 10:10. Trade up into here. 10:20. We put in a new high. Is this the right time? Nope. Right in here, we have 10:31, creating a new high in a 15-minute or 60-minute PD array. 10:31. That would be, after that, anything is extra, right? Like the algorithm is now going to either reprice higher, or it's going to look for a retracement for inefficiencies on the way down into lunch. Or it's going to consolidate like this and then run the stops during lunch and then do whatever it's going to do in the PM session. But that's a different section where this just not interested in. So 10:31 forms a new high in a 15-minute PD array. And it's still a decent range from entry up to exit anyways, if you're able to look at that entire range. But that also just comes with practice and trust in the model. Once you find whatever you're using, I think this makes the most amount of sense to me. It just works well for me, like finding the model that it's got the stuff that is required for a good setup, but then maybe some extra stuff that other people aren't looking for that's obvious to me, but it also functions well. Like, obviously, we're going to be looking for some sort of a market maker model in the morning. Everyone knows that it's going to be a market maker model. But then how do you frame it? What time does it happen? What time does the entry happen? What time is the manipulation? What time are you going to find an exit? Like, where's the exit going to happen in price, and then what time? So there's always got to be a level of X analysis, so the X plane, a time analysis on your model, and then there's going to be an element of Y analysis, meaning price. So finding something like, what kind of entry do you want to use? Maybe it's a fair value gap. What time does that fair value gap format? What time does it fill it? What time does it leave it? All that stuff you should be asking yourself if you want to build a model. And it should be down to like every single bit. You got to be very articulate with how you create a model, because any inefficiencies in your model is going to create opportunities for mistakes and emotional trading, right? Like, you want to have it where if you were to give a robot your set of directions and how you look at it, it would be able to key off on that same exact stuff, and it would have a really, really clean list of, this is what you do. It's very explicit in its nature. It's there. The problem is when you start off with a model and you learn ICT trading, and then you write down, here's my model. I'm allowed to take 3 trades per day. I'm going to look for a fair value gap entry, and it has to be the 2022. What happens? You're going to be stuck on this 1 minute chart looking for that stupid 2022 model, and you lose grasp of everything else. And then boom, you take a loss. Oh, I have 2 more trades I can take. You take another loss. Oh, I'm going to leverage up, so then my last trade, I can make the other 2 losses back. And you're focused more on just the P&L than the actual execution. And that's going to be detrimental to progression for sure, because you're not actually focused on this as a job, more focused on trying to get there quickly instead of doing the tasks that are necessary. So if you don't figure out a model, focus on both the X and the Y. And then obviously multi-time frame analysis is going to be really important. ICT always says daily bias or like a draw on liquidity is the most important thing. And it is 100% true. Like, don't neglect what he's telling you and don't go the long way. Like a lot of people have to do is, you're an entrepreneur learning trading. So a lot of the people who learn this kind of stuff, you want to go out and do it by yourself, right? Like you don't take anyone's recommendations or advice. You may take it at face value, but then you want to go out and figure it out yourself, just either subconsciously or consciously. ICT is not here to put you on a different path that's going to take longer. He literally gave you, like, this is from hindsight because I made it longer than it was supposed to be. He's giving you a blueprint that's like the quickest way you could learn it if you just listen to him. So when he says something like the daily bias or draw on liquidity is the most important part, it's 100% true. Once you figure out the bias and you have a strong bias, you just, the rest of the stuff, everything after just becomes easy, right? Like if you know one of two, like for me, the two things that are most important is draw on liquidity. Actually, no, that is the most important part. And then anything that's related to time after that. Like I'm just more focused on time. I already understand, how, at least in my mind, I think for what I'm looking for, my understanding on price is good enough. I already know the PD raise. I already know the fair value gaps. And if you're in this call in the first place, I feel like you already are in that position. Here's an IFVG. You're good at marking all that stuff out. You know all the rules of how a fair value gap works, how it's completely balanced. When is it left open? Even if you don't know that stuff, it's not super important. But then once you figure that stuff out, everything else is just time related. Like I'm looking at this x-axis more than the y. Like I care about what time is my entry happening, what time is my exit happening, what time is this manipulation happening. All that stuff is important to me. But then literally if you figure out your draw on liquidity, your directional biases, are we bullish or bearish? You figure that out with strong conviction and you're trading the New York session, you have two profiles. It's either going to be this or it's going to be this. Right? And then after that, it just becomes way easier. I showed you an example today from this week of a bullish example and a bearish example, and it followed the same exact logic. Manipulation at time, a change in the state of delivery that confirms you're reversing away, and then an entry after that, targeting time. We're not targeting a PD rate necessarily, we are, but we're targeting both time and price, 10:30 to 11. And a PD array. So it's got to be not just the PD array. Obviously, that's going to be the thing that's exiting. I'm not going to scrutinize it so much where, like this, at 10:19 or 10:20, if we were to trade all the way up into the 4-hour imbalance right at 10:20, I'm not going to be picky and say, okay, it has to make a new high at 10:30, and then I'm going to keep sitting there trailing my stop. If we hit the target, or if it's like London low, and we drop 200 points and we hit the target at 10:25, I'm not going to be so picky where, it has to happen at 10:30. Like you'll obviously learn the variance of when it happens and when it doesn't happen. Like 8:30 news may shift the timings. You'll see is what happens. And that's not super important. Obviously price is going to have its importance in it, but both of them are important. And I never understood why both are important until I actually sat in front of the charts and figured it out. ICT leaves the time aspect of it up to you because he always says time over price, but then he only teaches, not he only teaches, but he mostly teaches price. But then once you figure out the time aspect by sitting in front of the charts, it becomes much easier. You're able to figure out it has a set of programs. It does at the same time every day. You look for the same stuff: open, high, low, close, or open, low, high, close. Manipulation. Then you're getting the expansion leg. And it becomes boring because you just do the same stuff, right? Like we could go over to a different day, like of previous weeks, and it's going to be the same exact kind of stuff. And you probably could, it's way easier to spot because you actually know what you're looking for. And then this is where conversation about profiling happens, where, okay, now if you have a model, what do you do after that? Well, then your job is now to go into price, or you have to figure out yourself of when is the model high quality, what days does it show up, what news profile does it show up on, So then you're only in conditions where it's favorable for you, right? You're not going to put yourself in a position where the model isn't there, or it's a really, really hard time to trade the model, because then what do you think is going to happen? If you have a really strong draw on liquidity, it fails to reach it, and then maybe it comes back and stops you out. You already kind of know, okay, I'm going to be in a higher emotional state in that setting than I would be if it was a really clean and clear day, right? Like if you want to succeed in this, you're going to give yourself every single chance possible to succeed. So I was with the private group this week. I told them after this day on Wednesday, I said, there is no point in looking at Thursday on the NFP week. I don't care if the model's there. I don't care if it runs 200 points without me. Thursday of NFP, regardless if there's news or not, is a day that I don't look for my model, because I know it's low quality. I know that even if there is a model and I decide to take it and it gives me a winning trade, that's going to build a bad habit. And bad habits over a long period of time will kill you in this. So Thursday, like on NFP, is regardless of whatever it is, I'm not turning the charts on. And you're going to see people, there's nothing wrong with it. Obviously, if you're able to make money off of it, I'm not going to say anything. But like, if it's outside of their model, it doesn't really speak volumes for that. And you'll see that it's hard, especially with the day and age we're in now, where everything is posted on social media, right? Like you're going to have a model that maybe you're not allowed to trade Mondays. What do you see? As soon as you open up Twitter or YouTube, boom, here's my 17,000 withdrawal from my Monday execution. Like that stuff will kill your mental. You're going to start overthinking. And that comes with reprogramming your mind outside of trading. But it's going to be difficult, because then the other part of your body is going to be like, man, I told you we should have looked at today. Here's the setup. It's perfect. But then the logical part of you is telling you, okay, this is what I'm supposed to be doing. I get paid off of decisions, not based off time in front of the charts, not based off of how many contracts I use. I'm getting paid off of decisions. And you're just a really, really good decision maker. You're trying to train yourself to be a good decision maker. Over leveraging is a bad decision. You don't get paid long term. Over trading is a bad decision. Trading on days where it's really low quality is a bad decision, because what are you going to put yourself in? A situation where you're likely to overtrade or over leverage. I'm going on a rant here, but what I'm trying to say is, once you figure out your model, there's days where you just have to avoid it, and you don't care what anyone else says. It doesn't matter if Pro Gamer ICT posts a 17,000 execution withdrawal payout from his MT7 model. Like, it doesn't matter. It has nothing to concern yourself with, right? Like you can't compare yourself with someone who's on level 100 and you're on level 16, because you're not there yet. Eventually you will get there, sure, and then you'll be able to flex that same exact stuff. Or do you want to stay humble, not share anything? I think that's the better way to go. But like, you just can't compare yourself. You should instead take it as, okay, that person is where I want to be in 4 years or 3 years, 2 years, whatever it may be. You got to just submit to the process of, I'm not going to focus on that outcome. I'm going to focus on what are the things I have to do every day that's actually going to affect my life. How do I figure out what are the daily tasks that I need to do? I need to wake up 30 minutes before my session. I need to, exercise. I need to do this. Where then you're basically, trading has nothing to do with the charts. It's everything to do with you. And what you'll learn is, this whole time you're sitting in front of the charts is you're just creating the character. You're creating the person out of yourself that the money just flows to, right? Like, you're not going to go out. The good traders don't go out there and chase the money. They have the skills and the assets mentally that the money just flows to them. And you have to build that kind of person. So what are their habits? What are their decisions? How do they act day in and day out? Where then you show up to the chart, and over a month, over 2 months, over a year, the money just flows to you. You work for 2 hours and it just comes to you. You don't have anything to do with chasing it. It works. The money works for you. This just becomes a job. You show up, you do things you're supposed to do, and you get paid over a long term. Right? So, I don't know. Hopefully someone needed that. Spit and fire. All right. That's one person. That's all I care. 2 types of SMT. Higher time frame SMT, directional SMT. lower time frame momentum SMT. Yes. Yeah. I don't know if you're just sitting that, but that is high quality stuff. Yeah, there's going to be two forms of SMT. I just look for the higher time frame SMT. Lower time frame SMT is a little tedious for me. I'm not going to go on the 1 minute chart and look for something like lower time frame SMT between like the 1 minute highs and lows. You can do that, but that's something that's like you have to be hunting for it, and if you don't see it, you may miss a trade setup. And I would hate to miss a trade setup because I didn't see a 1 minute wick not being wicked out on ES, and it did on NASDAQ. Like it's good for sure because you get huge expansion moves like as soon as that SMT forms. I'm not concerned with getting the lowest low. I just want to be in, have a good stop loss, get out. I would say most people should focus on the high time frame SMT. First of all, you shouldn't even be looking for SMT if you don't have a model that requires SMT. I think everyone should require SMT just because it's important. You'll learn the different types of SMT. But yeah, the SMT on this in this case was that data low with ES. And if you're looking for SMT, by the way, 80% of it is going to be between NASDAQ and ES. That's your 80% of your high quality SMT is going to be between those two. And then the other SMT is going to be between YM and NASDAQ or YM and ES. And that's just because, and the only SMTs I'm looking for between NASDAQ and YM or like ES and YM is on session based liquidity pools. So for example, if NASDAQ had failed to run out their London low, ES had failed to run out their London low, there's no SMT that I'm seeing between those, but then YM pierces their London low and then it starts expanding up. I'm going to count that as SMT with YM. It's going to be rare, but it does happen. I would say 70 to 80% of the time you get these two, right? That's going to be the cleanest one. The other 10% is going to be YM random lows SMT and then YM session SMT. Very, 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 very rarely will you ever have DXY SMT. And that's hard to spot just visually anyways, right? DXY as SMT is going to be when NASDAQ maybe runs out their higher high and DXY fails to run out their lower low. Like this is hard to spot visually in the first place. And it rarely happens anyways where I wouldn't even concern yourself with looking at DXY intraday for SMT. You can look at it for draw and liquidity, but your goal is to make this simple and not complicated. So what I've learned is over time, I used to have it really up until like last month. I used to have this chart as 4 charts. It was NASDAQ, ES, YM, and DXY. And I would find myself looking at DXY, getting some sort of confirmation, and then I wouldn't really do anything with the information other than looking for momentum. And I kind of removed that out of my system because for me, it doesn't really serve any high quality functionality. I'll look at it. I still have it in my watch list. It's something that I still focus on for specific events, like if we have news or if we have consolidation and I'm trying to figure out why. Maybe it's because we're uncorrelated between DXY and NASDAQ. Like, are they both going up or they're both going down? Like, they're both going down currently on the higher time frame. So that's going to be important later on. But your goal is to make this simple. So I would say first, find a model that works for you from higher time frame to lower time frame. Same stuff you're looking for every day. Make it boring. Make it absolutely boring. And maybe your personality doesn't suit 1 minute time frame trading. Maybe there's too much information. There's too much stuff you're looking at. It gets complicated. That's fine. There's nothing wrong with that. Maybe you go work best on the 5 minute. My friend Elijah Pips used to really look at the 1 minute, solely look at the 1 minute. He switched to the 3 minute and the 5 minute, and now he's killing it. So you have to just figure out what works for you and don't follow the pack because that's what they do. This is something where you follow the pack in the beginning, you learn, and then you kind of have to break off on your own and figure out what works for you. That's why a lot of times, like, you'll watch someone's psychology video and you're like, oh, that makes sense. And then someone else's psychology video, you're like, yeah, that it just doesn't resonate with me at all. So it's going to be important. Yeah, if you got any more questions, you can put them up in the chat. I don't want to take up too much more time on a Saturday. I've already been going for, 54 minutes? Let me drink my coffee. Hold up. But yeah, then obviously later today, I'll probably just screenshot all these and put them up in my Notion for later. And reviewing on the weekend is going to be important too. So if you took trades this week, if you took, screenshots, whatever, Saturday is a good day for either rest and relax, a Sabbath. You just got to take time off, just relax, get everything, don't do a lot of stuff, just recoup for the next week. Or maybe you do that on Sunday. Saturday, you should be going and reflecting. So here's my 3 trades I took this week. What are the things I did good? What are the things I did bad? And both sides are important, right? Don't just look at what did I do bad and how can I fix them. You got to look at the stuff that you did good too. So what are the both things that I did good and bad? Is there anything I need to adjust? Be very frugal with your adjustments, though. I think over adjustment will kill you in the long term. Just kind of once you've done it for 3 months or 4 months, then you adjust. You'll have more wisdom as to what you need to change. Then, yeah, it's just figuring out, okay, how do you take care of yourself mentally? Because this is a mental game, and if you're not in a good position mentally, I'm not talking about crazy stuff. Well, obviously you should fix that, and you shouldn't be trading if you have crazy stuff to fix. But like the minimal stuff is really important. Like if you get peace from just sitting outside and enjoying a cup of coffee or some cereal, whatever, in the morning on Saturday for 30 minutes, no distractions, you put your phone inside. I think that's important. I think you need to have that, some sort of kind of just you gain your energy back. And even if you do that daily, I think it's important. But all that kind of stuff is important. And then journaling is going to be like the best thing you can do. I don't think he's still in here. Is Krug still in here? I don't know how you say that name. He's not in here. Okay, anyways. Hopefully he watches the recording back. But journaling was like one of my biggest aha moments psychologically. And what you do with that is I think I covered it in a psychology video. I'll send the video. Let me see if I can find the link. But journaling and spending more time in that journal is going to be how you beat yourself. That's how you beat your own mind, is by reprogramming it. And what you could do is, if you're interested in that kind of stuff, look up like strict business people's psychology. Matt Shields is really, really, I'll type it in here. Matt Shields has got maybe, I don't know, 10,000 subscribers, maybe, no, 50,000 subscribers on YouTube. But this guy is an SMMA beast. Like he makes crazy amounts, but his tips that he puts on YouTube, like, were game changer to me. But this video here, if you watch the latter portion, I talk about some psychology stuff if you're interested in that. But like something as simple as reframing how you think about yourself and your identity as a trader. Or like you maybe see people on YouTube, day 45 of being an unprofitable trader. Like, when I read that title, to me it's like, some people are going to think that's fine and there's nothing wrong with it, which there may be nothing wrong with it. But to me, it's like, why would you categorize, even if it's true, why would you categorize yourself as an unprofitable trader? Right? Like, think about what that means psychologically. He's or she is typing up that title. Okay, I'm an unprofitable trader. Do you not think that the way that they think influences their actions, or influence their words of how they speak, which influence their actions, which then influence their habits, which then influences the outcome of their trading career? It does. 100% it does. Right? Like, you're not going to go into, say you play football. You're not going to go into a football match and we're like, okay, day 76 of being a losing football player. Like, you're not going to win any games. You're not going to succeed in the sport if you already think from the jump that you're a loser. That's what being an unprofitable trader is just implying that you're a loser. And even if it's not true, even if it's true, I mean, you shouldn't think of yourself like that. You're arriving to a destination you just have not come to yet. So the way that you think as a trader is really, really important, and no one talks about this. I don't know why. Like it's so important because that's literally the way that you flip your mentality. But like the way you carry yourself and the way you talk about things will show up in your daily actions. So something as simple as, like for me, I started doing this about, I don't know, 2 months ago, maybe. I think it was about 2 months ago. I used to do this just in my head, but I started every morning before I come to the charts. I will literally write out the same exact stuff every day. Like I'll write out, through God, I am a profitable trader. I am successful. I attract the money and wisdom. It flows to me freely. And people are gonna think, oh, that's cringe or whatever. It's just affirmations, doesn't work. But I'm telling you, when you do that for 30 days straight, it becomes those thoughts that you put on the paper. It becomes your identity, right? So if what starts happening, if you think of yourself as a profitable trader, if you think of yourself as, I am a dedicated, a disciplined, and I follow the rules that I set for myself. What happens is sooner or later, your actions start following suit. Just because this is your identity. I've created myself. My persona is, I am a profitable trader. You're not going to want to contradict yourself. So subconsciously, you've reprogrammed your mind into thinking, I already do the things that are necessary mentally, and then boom, your actions start following. Sooner or later, you start figuring out, okay, I'm just executing. I'm not thinking, because it lines up with how you think. I think, so I am. So put yourself in a situation where you think about yourself as a positive person. I'm a profitable trader. The money flows to me. I don't chase the P&L, right? I'm focused on the execution instead of the money that comes from this. And when you start thinking like that and your actions support itself, you get so much more confidence. Your confidence goes through the roof, because then when you take a loss, it has nothing to do with you. It's part of the game. When you miss a trade, it's not a big deal. When you see other people who are profitable or who are doing well, it doesn't feel like a kick in the gut that you're not one of them, even if it's not true, because your subconscious has no difference between a lie and a truth. It doesn't know the difference. So when you start, creating the truth that you want to live, it's basically working backwards, right? Like you kind of, in the beginning, you think, okay, I have to do all these things to then think like that. Like I have to become a profitable trader. I have to make X amount of money. I have to do all this. And then eventually my mindset will reflect that. It's not true. If you flip it on its head, you create a mindset and you create this is my identity. I don't think that you should be solely focusing on, this is my identity as a person, because that'll kill you in the long run. But creating that, this is my trading identity. This is who I am as a trader. I'm successful. I'm profitable. I follow my rules. I'm extremely disciplined. What happens is then your thoughts become words, words become actions, actions become habits, habits determine character, and then character determines your destiny. So you're working backwards from, you're cheating the system, and that will crazily improve first of all, your mental health regarding trading and in general. And then second of all, your actual trading will improve. Like your decision making will improve, your actual management of losses will improve, because this is all just a game about how can you manage your losing trades. No one cares about your winners, to be honest. Someone posting a win, everyone can do that. Someone posting a loss, that's going to be important, because it shows the character of where you're comfortable sharing the things that your flaws, right? If you're open about that stuff and you're open to criticism, I'm telling you, that'll take you way further in this than someone who, hides away and you take a loss, you don't even look at it. You have to be uncomfortable in taking the loss, doing the journal, posting the screenshot that maybe has 17 executions on it, on micros and on minis, putting that in your journal, sitting through it. Or maybe you blew an account, you sit through it, you look at it, here's the screenshot, here's this, here's how I can fix it for next time and improve. If you kind of just avoid it and push it away, it's like it never happened. And you don't want that. You want it like it happened, so then you don't do it again, right? You want that stuff to happen. If you don't want it to happen, but if it does happen, you want to at least learn from it and not push it aside and just act like, oh, I'm better than that, or that was uncharacteristic of me. It's not going to do anything to improve your actual trading. And if you think about this like a business, what do businesses do? They solve problems. And the best businesses solve the best problems and actively solve problems every day that it shows up. So you being a business owner, you being someone who hopefully takes this seriously, your whole job is to solve problems as they arise. What are examples of problems? Well, drawdown is the major problem that everyone's going to have to deal with. That drawdown is the major problem that will kill traders. What's another problem? Maybe a broken model. Maybe your mindset isn't the same. Maybe something happened outside of trading where it's a problem that you now cannot think clearly when you come to the charts and you're now using it as an outlet. All that stuff is, you have to address it, and you have to treat basically your life as, it kind of sucks being a trader, but you have to treat some aspects of your life like a business, and you have to manage the problems and manage, expectations accordingly with how they should be, and then your performance will follow through. Definitely a psychological video for today. I'll post the recording, by the way. I don't know if I answered that question. It'll all be recorded. I'll post it up on YouTube. Maybe listed. Most likely, 100% will be unlisted. But I don't know if I'll post it. Maybe I'll post it up on public, just because. But I don't know. Hopefully, some of that stuff helped. If you want, I'll type up like a PDF or something for next week. Just on like psychology stuff. Just mainly focus on how do you improve your psychology and how do you use your own mind to work for you, which is really important. I don't think it's better than the advice of be emotionless as a trader. Like, we're emotional people. How do you just remove the human side of you? Like, the whole algorithm is based on you being a human. Like, it's not going to work on robots. Anyways. So, yeah, if you got no more questions, we'll wrap it up here. I appreciate all you guys joining and sitting through the spiel. Hopefully you learned something about price action, maybe about yourself as well. If you got any questions over the weekend, shoot me a DM. I'll try and answer those. And if I don't see you, if you're in the private group, we'll probably have a stream Monday through Friday. The news profile looks good. I'll pick and choose based on what days. It may be on Monday, maybe not. It depends on how 9:30 opens up. But yeah, if I don't see you guys, take care till the next backtesting stream. Make sure you're getting outside and taking care of yourself. And I'll talk to you guys soon. Peace.